Hey, this is Chris, and today I'm going to be sharing my thoughts on some of the new Bitcoin and cryptocurrency ETFs that have launched recently on the ASX or the CBOE or are planning to launch very soon. So I'm going to be talking about which ETFs are available, whether you should invest in Bitcoin and cryptocurrency ETFs, and then finally what our favorites are at Stockspot. So first of all, as I'm talking today, there are currently two Bitcoin-related ETFs listed on the exchange. There's the BetaShares Crypto Innovators ETF, the code is CRYP, and then also the Cosmos Global Digital Miners Access ETF. It's a mouthful, the code is DIGA. They've both been listed for a little while, unfortunately have both performed pretty poorly. So they listed in 2021, there was a lot of exuberance around at that point for cryptocurrency, and they have both fallen heavily since then, around the vicinity of 70 or 80%, so heavy falls. Those companies don't actually invest in the underlying Bitcoin or Ethereum or any of the other digital currencies. They actually invest in companies that have exposure to those, but those companies have performed pretty poorly up until now. We were quite concerned about these ETFs when they launched because there was a big fanfare, there was a lot of excitement, and typically when this happens, when a trend is very popular, it tends to disappoint investors, and it certainly has done so over the first few months. But those are two ETFs that give you exposure to companies related to these cryptocurrencies, but not the actual underlying cryptocurrencies, and there's a big difference. Now, the next batch of ETFs that are launching very soon in Australia are ETFs that actually give you underlying exposure to Bitcoin or Ethereum. So it's a big change. It's taken a lot of time for the regulator to get comfort on this. And there are three of them that are launching very soon. So the first one is a Cosmos ETF again. It's a single fund that purchases units actually in a Toronto listed ETF. So you're actually buying units in something in Australia that gives you exposure to units of something in Canada. So it's essentially a fund-of-fund type structure, but it gives you access to Bitcoin, and it's planning to list very soon. The other two are being offered by ETF Securities in combination with another company called 21 Shares, and there's going to be a Bitcoin ETF and an Ethereum ETF. Both of those aren't fund-of-fund structures, but actually give you exposure to the underlying cryptocurrencies. And aside from direct ownership, the other big difference is that these ETFs will allow you to redeem the ETFs for the underlying cryptocurrencies. So there's that same redemption and creation process that exists in all sorts of other ETFs. Now, the funds have said so far that they're not planning to use any derivatives, and they're not feeder funds into other global funds. And additionally, they're not planning to do any lending of these or any staking. And so from a consumer perspective, they're less risky than ETFs or other products that are doing those sorts of activities. And also, an important factor to note as an investor is that the cryptocurrencies are going to be held offline in what's known as cold storage, which basically translates to being off the internet or off the electricity grid, and so it's typically believed to be more safe than leaving them on the grid. And so these are the ETFs that are planning to be launched very soon. It's taken a bit longer than they expected due to some regulation initially, and then needing to get all of the market makers and market participants on board with the extra margin they're going to need to hold in order to offer trading in these securities. So that's what's coming up. Should you invest in these ETFs? Look, from our perspective, cryptocurrencies, like other types of speculative investments, can form a small part of any portfolio. We don't believe, and they certainly aren't for our Stockspot clients, a core part of the portfolio, and we don't think you need to invest in them. They're very volatile, and we would consider them to be a speculative growth investment. They're certainly not defensive. But like any other investments that are speculative, like, what's really important is risk management. Only investing a very small allocation overall. Dollar cost averaging where possible is something we recommend to clients, and then also rebalancing. Rebalancing is something that over time would have helped investors in Bitcoin, capitalize on these big rises and then falls that have happened over time. So, risk management's critical. It's not a core part of our portfolios, and we wouldn't be recommending it to clients as a core part of their portfolios, but certainly as a speculative satellite or a piece of a portfolio, Like people might speculate on other areas, that's where it may form part of a portfolio for someone. Now, what to look out for when picking one of these? Right now, we're not offering them to our clients. We want to do a bit more analysis and understand them, and some of the factors that we'll be looking at carefully at the size of these ETFs, whether they get to a commercially viable size and are therefore sustainable products, the fees that they charge, the slippage, so the cost of getting in and out, really understand the counterparty risk. So what are some of these risks you face? What sort of insurance do they have? And also what are the holding costs that they're, that they're causing when they're getting held offline? These are some of the factors I think are important as an investor in these ETFs. So you actually understand not only that you're getting exposure to an ETF that has cryptocurrency in its underlying basket, but actually what's the economic benefit you're going to see over time. Because what we've seen with some other commodity style ETFs where they have exposures that are expensive to hold or owned through with the oil ETF synthetic measures, is that you may not always get what you're paying for and what you're expecting. And so the actual cryptocurrency may perform one way and the ETF may do something quite different. So we're keeping our eye on some of these factors before we offer these as a small speculative part of clients' portfolios. That said, we do think that for a very small part of a portfolio they may be appropriate, but risk management's critical. So the great example is the recent listings of the CRYP and DIGA ETFs, should really help people understand how volatile these things can be. Those ETFs only launched a little while ago and are already down 70 or 80%. That's a lot of money people can lose, and so having a huge part of your wealth tied up in these things, is likely to lead to you needing to sell them at exactly the wrong time. So make sure that they're an appropriate size within your portfolio. And also, we think dollar cost averaging is important because usually when the most excitement is there is when these things are going to not give the sort of returns people expect over the next little while. And when no one's talking about them, that's probably when they're a safer part of being added to a portfolio. And so that's our thoughts on the new Bitcoin and Ethereum ETFs that are listing and some of the factors we'll be considering before we offer them to clients.